What's the difference between a bad health plan and the best health plan? Well, if you are self-employed or early retired, that is a really important question because you have to buy your own health insurance. And we are going to answer that question right now. If that sounds good to you, hit that subscribe button and the bell to be notified every time I post a new video making sense out of health insurance for those of us who have to buy our own health plans. All right, let's get right into it. So first and foremost, let's start with the plan. So the plan is just an agreement between you and the insurance company that if anything happens, either you get ill or have an accident, who is going to pay for what? Now, when you start to shop around, especially when you come off an employer plan, there can be some expectations that when you go out there that can be hard to come over and sometimes really a shock when you come face to face with them. Now, first and foremost, those expectations, especially like I said, when you're coming off an employer plan, is pricing. When you're on an employer plan, they're subsidizing and pay part of it. So like when I came off went self-employed for the first time, I was paying $35 a month for it. And when I saw how many hundreds of dollars it was to buy and pay for my own health insurance, I was shocked. Another expectation that people bring to the table, especially when they're coming off an employer plan or ending their COBRA, is like, hey, I just want to have the plan that I had with my work, but buy it privately. It doesn't really work that way. There are some limitations on the private individual market of the plans that are available and what you can order, so you may not be able to have the exact plan workout that you do with your work plan. Now, I do want to say too that there are some really lovely plans out there, especially if you are healthy and can qualify for an underwritten health plan. All right, so the next thing we talk about are the agents. Now, I do recommend that you work with an agent, and the reason why is that when it does come to the health plans, if they're a licensed certified agent, then they should know those health plans inside and out, and they should be able to answer your questions, not only now when you're purchasing the plan, but if you have a good agent, and they are out there, again, as I go through in that video, if you have a good agent, they are going to be able to be a resource for you in the future, not only between you and your plan itself, but also you and the insurance company. So you can always go to them for questions about the plan, about communicating what steps you take, especially if you have claims. So I highly recommend that you work with an agent. Now, a good agent is someone that is not going to yell at you. Okay, this is all things that I've heard from other clients that have told me about this, and I do know that these agents are out there, that if they yell at you, if they curse at you, if they refuse to send you information, if they are fast talking you, basically at any point, if you're talking to an agent and you're uncomfortable, hang up the phone. There are plenty of agents that are out there that you can speak to, and there are good ones out there. You just need to find them. So the company that your health insurance is written through is actually a really big deal on making sure that you have a good health plan, your best health plan, versus a bad health plan. Now, this is for a couple of reasons. Health insurance is actually very regulated, and like I said, it was regulated on a state level. So there are certain things that health insurance companies and their agents should be doing on a regular that if you are seeing them not do, then you need to go somewhere else. Now, one of those is that you should be getting the full brochure, and a partial listing of benefits in an email does not make a brochure. It should be a PDF attachment. It should be many, many pages, including all of your limitations and exclusions, all of your benefits that are listed out. Again, a listing of benefits in an email is not a brochure. Please do not purchase a health insurance policy based on that. Another bit of a red flag is if they are asking you to pay to apply, not in your first payment or not an initiation fee, because those are common. Asking for your credit card information or your banking info when submitting an application is also common. But if they're saying for you to even apply, you have to pay money, that's a red flag. That's a no. Just walk away. Find another plan, because that is questionable at best. Now, the last piece I want to talk about on the company is actually about shares. Now, the reason I want to bring up shares is I've talked to a lot of people that they love these little plans, which is wonderful. But the reason why these lovely little plans might turn into a bad plan is basically because a share is exactly what it is. Everybody is pulling all their money together, sharing it, and then, your premiums are going directly to help pay for, other people's illnesses or accidents. Now, if that share goes down to zero, then that's it. The company goes bankrupt. And I've talked to multiple people where that has happened to them. They've received letters in the mail saying, I'm sorry, our company's bankrupt. You no longer have health insurance. So I just want to make you aware of that situation of, in case that happens, that you might be caught unawares in the middle of the middle of the year without any health insurance. All right, next on the list is the subsidy. Now, the subsidy can make a mediocre plan into a great plan because you're paying a lot less for it. So let me give you an example of how that works. The subsidy, basically, it becomes a sliding scale. Say you had a $1,000 plan based on your household income, that might bring it down to $400, not having to pay that $600 difference, which is now a tax credit for you. So you're only paying $400 for a $1,000 plan. Yay. Now, the way that this works is all described on the healthcare.gov website, which you can go there and see. Now, the reason a subsidy can take a good plan and make it a bad plan is for this reason. The subsidy, that tax credit and how much you're paying, is a projection of what you're going to be earning over the next year. Now, if you get to the end of the year and you're doing your taxes and you made more money, you might have to pay a portion or all of that tax credit back. So that $1,000 plan that you're paying $400 for, you now have to pay back as if you were paying the whole $1,000 plan or some amount in between. Now, I've talked to people that they have had to pay back $18,000, $25,000 at the end of the year because they ended up making more money than they thought they were going to. They sold up a piece of property or got an inheritance or a retirement package that finally came through. So any sort of influx of money, as soon as that happens during the year, and if you have a subsidy, make sure to jump on that right away and contact the health insurance company and get your subsidy adjusted. And then also know too, so you're paying the correct amount for the rest of the year, but also to find out from them, okay, so how much am I going to have to pay back on the previous months that I've already paid? So you've got an idea. Basically, you're going to be paying back a little bit more, but at least you're grabbing it and nipping it in the bud right when it happens and right when you become aware, so you can move on and maybe even get onto a different plan or a lower priced plan or lower benefits plan, so you're paying less as opposed to being stuck with this, paying this giant amount back at the end of the year. So the next person we're going to talk about that can make a good plan into a bad plan and vice versa is the network. Now, the network is the group of doctors, hospitals, labs, facilities, basically that are in network with your health plan and will take your health plan. Now, the difference between the types of networks is also very important, and these are where the terms HMO, PPO come into play. Now, an HMO, it's good to know that on an HMO, you basically need to get a referral from your primary care physician to be able to go to any other doctor other than them, or the health insurance company will not pay for that visit, even if that other doctor you're going to is a network. Versus a PPO has a flexibility. You can just go to whatever doctor you want to, and as long as they're a network, there you go. Now, that is basically, for instance, if you hurt your foot. On a PPO, you can just go straight to a podiatrist. If you are on an HMO, first you have to go to your primary care physician, and then they'll refer you to a podiatrist of their choice for you to go to. Now, if you're on a health plan that, say, doesn't pay for doctor visits out of the gate, or if you have a large deductible before you can see doctor visits and have them paid for, you're not only paying out of pocket for that primary care visit, but you're also paying for that other visit once they sent you the referral. So now you've got 2 doctor's visits for a hurt foot that you're paying out of pocket right out of the gate, versus on a PPO, you've just got the one. Now, the reason this is important is because again, looking at the type of plan you have and how you're going to use it, and also having those expectations. Because if you're like, oh, I have doctor visits on this plan, that's great. But if you didn't realize that you don't have them until after this large deductible, so, the expectation is that you're going to be paying a lot out of pocket, well, then again, that can turn a good plan into a bad plan, not necessarily because the plan is good or bad, but because you didn't have expectations or know how it's going to work. So again, when you're talking to your agent, ask them for some scenarios of, what's going to happen in this situation, what's going to happen in that situation, and they should be able to walk you through all of that, as well as checking to make sure that the doctors and hospitals and labs that you prefer are in network with the plan that you are getting. Okay, next we're going to talk about is the fine print. Now, don't turn it off. Stay with me, stay with me. I know nobody wants to talk about the fine print because it's exactly what it is. It's fine. It's boilerplate. It's hard to slog through. You're not really sure what you're reading. It's a lot of repetitive information. But actually, I see that as the meat and potatoes. Maybe that's just the health insurance geek in me. But it is where a lot of the key points that you need to know are for your plan, which can take, again, a good plan into a bad plan if you don't know that these exist within your brochure. Okay, so the fine print. These are the basic things that are kind of the red flags because, to be truthful, a lot of it is boilerplate. It's just getting the information out there. But the key things that you should be looking for are kind of the key things that are, most important to you. Now, what is pre-existing conditions? Now, pre-existing conditions is important because there are a lot of plans out there that have no coverage for pre-existing conditions. So if you had any diagnosis within the past 12 months prior to signing on that plan, they're not going to have any coverage for it. Some plans have no coverage, some plans have limited coverage, like no surgery. So if you have high blood pressure, you can still get your doctor visits and labs and etc. and they'll pay for the benefits on there. But some plans have just zero, nothing, and nothing related to it. So if you had high blood pressure, but then you end up having a heart attack, they're not going to pay for any of that. So finding out what the verbiage is on pre-existing conditions in the plan is really important. Again, ask your agent specifically pre-existing conditions. Now, number two, on some of the plans, they have what's called underwritten at the time of claim. Now, there are underwritten plans where they underwrite at the time of your application, and basically you either get on the plan and you're good, or you don't get on the plan and you have to find something else. If the insurance plan that you're about to sign for is underwritten at the time of claim, that becomes a sticky issue. And the reason is that if it's underwritten at the time of claim, that's an opportunity for the health insurance company to go, we're just going to deny it because you have high blood pressure, so you need a stent in your heart, so I'm going to call it a pre-existing condition and we're just going to not let it go. So if you're going to sign a plan that has any sort of underwriting to it, you want to sign it on a plan that is underwritten at the time of application, not at the time of claim, because again, it basically leaves a wide door for the insurance company to step through and go, no, I'm going to deny your claim. You really don't want that to happen. Now, there's also specific benefits that are listed in the fine print of basically just what is not covered. It's their exclusions. Now, and if any of these things are things that you are specifically looking for, then you definitely want to make sure that they are listed as one of your benefits and not kicked out in the fine print. Now, to do this, I recommend that you basically find out exactly from yourself and your family what are the benefits that you need and what are your priorities. Now, this is the things like, do you need health insurance? Do you need mental health coverage? Do you need wellness? Some plans do not have wellness. Do you want to have doctor visits paid for right out of the gate? Maybe you have kids that are going to the doctor's office pretty often. Or do you not go to the doctor very often? And if you don't have those benefits and it brings the premium down, is that a priority? Is that something that you prefer to have? So these are all things that you want. Are you pregnant? Are you going to have a baby here in the next year? Or you want to have a baby, or you need to have a surgery? These are all things that you want to ask yourself and find out ahead of time exactly what your needs are and what you want in a plan and your priorities. And what I have put together is called the Start Here Checklist. Now, if you click down on the link below to my website, which is stephanieritt.com, if you click down below, you can have that sent to you, and it basically walks you through all of those things, basically information you just write down the notes on of exactly who you want to get covered, what your needs are, help you figure out your priorities, etc. So you can take that information before you talk to any agent, before you request any quotes, and you have all the information that you need to find that best health plan and make sure that you're avoiding the bad ones. Because a lot of it comes down to there aren't that many bad health plans and there's not that many bad health companies. Most of them are really reputable and the plans are quite nice. The main question is, what plan is the right and best fit for you? If you like this video or it helped you at all, I'd love to hear from you in the comments down below. Please subscribe and hit that bell. And also too, if you'd like to apply to work one-on-one with me, I would love that as well. Go to my website, stephanieritt.com. I'd love to hear from you. You guys have a beautiful day and I'm wishing you so much joy.